What's up, guys? How's everybody doing? Just give me a sec. Give me a sound check. Just give me a quick sound check. We'll give everyone a minute or two. Settle in. Don't worry, my camera won't be on the entire time, so that box will be out of the way. Sounds great. Cool. Welcome. Hopefully everyone's doing well. We'll get started, like I said, in a minute or two. Just reshared the link. And we should be good to go. 2 days in a row, but that's for a very specific reason. I don't mind streaming 2 days in a row, but I mean, I want to stream more frequently, and I have been streaming more frequently. It's not me just saying that now. But yeah. Hopefully everyone's doing well. Is the background volume okay? It's not intruding on my volume. Kind of mellow. Good ambient noise. Bitcoin go up. It's okay? Cool. All right. I think that was enough time for everybody to join. Introduction stuff out of the way. Formalities out of the way. What's going on, guys? My name is Ryan, also known as Canteringclark. You all know that by now. I'm sure that you all know as well that everything that I talk about in the stream, just my opinion, just for entertainment purposes only. None of this is to be misconstrued as financial advice. I don't want you listening in on my streams and letting it dictate your positioning, right? That's all personal. That is your own responsibility. You're accountable for yourself and the positions you take in the market. Again, none of this is financial advice. Also, since I am going back and forth a lot lately, what's it called? I mentioned this yesterday. If you don't already follow me on Twitch, you could go to twitch.com/Canteringclark1. So I believe that is, I'm just getting used to Brave, which is pretty awesome. Yeah, Canteringclark1, right?
Leading the NFC East and
Canteringclark1.
Current.
Follow me on Twitch because I do use that more frequently now as well. But while we're on YouTube, if you're not already subscribed, be sure to subscribe. Hit the like button, all that nonsense that YouTubers say in the beginning. Just as a caveat, I do my best, but I'm a trader by nature. I'm a trader by profession. I'm not a streamer. So these streams are not perfect. They're not edited. And that'll lead into yesterday's stream. But before I mention anything with regard to that, also, you'll see that there are links above on the upper left-hand corner of the screen and also down below. So yes, I am partners with Phemex. I am partners with Bookmap. And obviously, it's 2021, right? A partnership implies some type of monetary involvement. So just to put that out there, I am not doing it for free, right? But that's the way the world works, right? But you just have to be sure that you are as upfront with that as possible. I think that kind of covers it. Yesterday, just to recap real quick, I apologize for anyone who tuned into the stream yesterday. I deleted the stream. I was pretty abrasive to one of the people that was more or less just talking shit, trying to get a rise out of me. And they were kind of the equivalent of someone in the stands at like a ball game saying that like Derek Jeter didn't know how to play baseball. It was like that stupid. I think he said originally that I was a trust fund kid. And then I went into this whole diatribe about how when I was younger, my dad had 3 jobs and, I made myself. And I could have just ended at that, but I definitely just started getting a little bit more aggressive with this person. And I should have just blocked him. And I don't want to leave that up because, I don't know, it didn't make me feel good. I don't like that. When someone is, honestly, when someone's like that, it's usually because they're having a tough time in one way or the other. And I've had that happen before, and I've actually had really good relationships come from first interactions that actually started that way. Some people that actually became really close friends of mine today, they were going through a rough period, and rather than me sort of spit back, I tried to kill them with kindness, and it turns out that everyone's going through something. And I don't want to be that person to just start, I don't know, chewing someone apart. So I didn't really, it didn't leave me feeling well afterward. And I'm like hypercritical and aware of, I guess, myself in that regard. And I don't know. Didn't make me feel good. And that's the only thing that matters, right? You should be doing things that make you feel good in life. So that being said, this person was clearly, their intent was to piss me off, and I should have ultimately just blocked them or stopped the stream. And moving forward, if there's anyone who's sort of rowdy in the rafters, keep it fun, keep it light. But if it gets out of hand, I'm just gonna block you from the stream, right? Rather than allowing that to take up any kind of headspace, use any of my bandwidth. It's already spread too thin in the future. So that being said, hopefully everyone is doing well. I'll go through the questions in a second. Are we feeling bullish or are we feeling bearish? Did everyone watch the hearing today? So I see the chat on one screen. I don't know if you guys can see, but my wife has taken over my office and decorated a little bit. So I have a Christmas tree in here now. We have a Christmas tree in every room, unfortunately. It's kind of ridiculous. But did everyone watch the hearing today? And don't worry, just getting all this stuff out of the way, we're going to go over the charts in a second. I just want to know if everyone watched the hearing. Just go through the chat. CBD neutral. What's up, all my good friends? Cornholio, Fish Tank. What's up, buddy? X Factor, David. CBD neutral. Yeah, it's neutral. Actually, it's interesting because the run up today was not really supported by any kind of majorly aggressive buying. It looked like just thin conditions. Maybe people pulling liquidity in advance before the hearing. So a little bit of light covering took us to where we are, but it wasn't like it was anything overly aggressive. Okay. If liquidity is pulled, I expect that price is likely going to continue. Obviously, it's not always the case that works out that way. Yeah, I had a mentor earlier on. I had a few mentors, for sure. A long time ago, though. Still traders that I look up to, absolutely. I'm always trying to be a better trader myself. I think one of the best things you can listen to is that Matthew McConaughey award acceptance speech about meeting his future self and looking forward to meeting the person he's going to become. And I think that's important in every facet of life, regardless of what you're pursuing. And absolutely, mentors really help. Okay, Sam killed it. Yeah, it was great. Brooks was literally Mr. Brooks. If you guys saw the Kevin Costner movie, he was just an absolute hitman up there. Haas wasn't bad. Coinbase is they're obviously a huge player in the space, but they I don't know, I would use probably a poor term to describe what they do to retail. But it begins with an R. We'll just say they rake retail over the coals. That's a better way to put it. It sounds similar, the first word. But they rake retail over the coals. It's like for 99% of people that use Coinbase, it's a 1%. It's 1% for a round trip, right? So 50 basis points on, 50 basis points off, and that's an exorbitant amount of money to pay in fees. And if they're trying to push the platform and crypto to the mainstream, I mean, not for nothing, where are rather most of the traditional brokerage platforms going towards? They're going towards sort of a feeless model. So I mean, 50 basis points is gross. But crypto fees are pretty high in general. So I don't know if you guys use Phemex, but they have the subscription-based fee model. So it's now like an incentivized feature where if you do KYC, you get the reduced fees. But at least with crypto, if you are using limit orders and providing liquidity, you're incentivized to do that because you get a kickback. But I thought today was a net positive for crypto. I think that Sherman really has clearly, he is out of the pack. He is way behind. He is a dinosaur, and I think most of his colleagues recognize that. I think that the United States is in a position where, with what is taking place geopolitically, and with the position that the East has taken, specifically China, that this represents an opportunity for them to, get ahead in that regard. And you don't want to be pushing away or stifling innovation. It is just the path forward, right? It's the logical progression of things. And you don't want to get in the way of any kind of tech that might benefit the amount of people that this particular tech may benefit. Obviously, there's this whole sort of snake eating the snake's tail that's taking place in crypto, where it's just like every product is a trading product, and it's all like automated market making, and DeFi is just a new platform. The next DeFi platform is just another yield-bearing platform, another swap platform. It's all the same shit. But there are a lot of obvious major benefits when that tech progresses, when it finds a real place in the current financial system. So yeah, I thought it was really bullish today, honestly. Cool. All right. Yeah, no, it's all good, Sigmar. I definitely did not feel good after it. I just felt like an asshole because I said a couple things that were just poor taste. Any books? You have a list of books. I always say just message me on Twitter. My DMs are open again. Okay. Cool. Yeah, so I'll just answer this question and then I'll get into it. So you could tell liquidity a few different ways, right? You could just check book depth. You could look at the CVD. So the CVD really is a good indication of overall levels of liquidity. When you have CVD divergences, ultimately what you're showing is prices approaching a level where there is higher liquidity, where there is ultimately more counterparties, more friction, and so forth. You could look at liquidity on a footprint. You could see the lack of activity in a candle. That's typically going to happen when there's a great degree of one-sidedness, stop runs, liquidations, so forth. Very aggressive one-sided behavior. We could see overall liquidity. That's a benefit of, and this is a platform, like I said, I partnered with Bookmap recently, and I just had to, honestly, because with crypto, there's one of the main issues is exchange fragmentation. There's a lot of new hot products coming out, and you can see that most of them are moving in the direction of sort of putting all of the information on one source, whether you're looking at like a charting platform, integrating all of the exchanges, creating aggregated indicators or indicators that are aggregated from those exchanges, whether you talk about some of the other order flow platforms that are including data from multiple exchanges. That's all great, but ultimately a lot of them, you have to look at them separately. When we're looking at this above on the upper left-hand corner of your screen, I'll get rid of my face. I don't want to take up the space. You're looking at the most relevant spot exchanges. This is actually being changed. Right now it's Bitstamp, Binance, FTX, Coinbase Pro, and Kraken. I have them adding Bitfinex to this as well. So this is basically all the spot books. And I have mine filtered to show a certain amount. Right? I don't want it to be as noisy. You could reduce that and you could see all the levels that are stacked up. But you could check overall levels, pockets of large liquidity, large offers, large bids by just using this platform. I also have it so that I can see basically the same behavior that I would look for on the tape when it comes to larger orders getting behind a move. I have that set up as well. So I have these bubbles that are set for, in this case, they're set for 50 BTC on the spot exchange. I want to see where like meaningful tape bombs come in. And I just define meaningful by obviously a certain monetary value. But this is great. All of the exchanges into one, and we're seeing how the book is responding, how buyers are responding, how sellers are adjusting, and so forth as price moves. And you could also see just areas where there are large pockets of rather nothing, right? Sort of like the ether, the void. So one thing that I look at is how it's changed, or rather if it hasn't. And for example, at 46 down to 44, nothing has changed. If anything, it's stacked a little bit more. At 46, we've had a bid in the realm of, and it stayed actually the same, so 32 million. It's not massive, right? Like I said, like after a 2-year long, 20-month long bull market, people have a lot of money. But we see that at 45, right? At 44, same thing. So in total, you have about $50 million looking to be deployed to buy that dip. And that could change, right? That's just showing there's a lot of liquidity right there, and it stayed the same, which is kind of important, because what you'll often see is that when someone doesn't actually have any intent of doing business, they haven't been there, right? They're going to flash in and flash out, and a lot of times that behavior is going to be to manipulate buyers or sellers into doing something, to looking like it has support or looking like it's at resistance. So it's kind of meaningful that that's been there, but again, it could pull out right away. What I like to see is, one, what happens when we get there, right? Do they have an intent to fill? Do they adjust? Do they pull away? What you'll more often than not see is when you have sort of bids that have shown up more recently and it looks like, oh, we have someone looking to buy the dip. When price comes back down to it, they get a little gun shy and they end up pulling away, and we never actually do business at that level. So there's a lot of different ways you could analyze liquidity. You could look at volume-based candlestick. You could look at tick-based candlestick, see where a lot of activity is coming in but not a lot of progress, and you're basically just looking at areas that are thick and thin in the book. All right, so let's take a look at, so this is available to anyone who has Bookmap. This is loaded from their data, or you could just make any multi-book that you want. So this is Bookmap. Bookmap, Bookmap. I could create any multi-book. So I could go create a Bookmap multi-book for Solana. I want to see the Solana books on FTX and Binance combined, and it's incredible. So the only real thing that I've noticed as of the last couple of hours is we've had some stacking above, and I think it's because I think, like I said, the higher probability outcome is that price ranges a little bit longer. So we do have some presence from 51.2 to 52 now, whereas it wasn't as obvious yesterday or the day prior. So we've had that stacking since, as you can see on the chart, this is going back to earlier this morning. All right, so let's get into it. So a couple things. Obviously, we have, from what we see here, we have major areas that are looking to do business, some of them more recent than others. 59K to 60K, we have sort of the same thing that we have down at 46, which makes sense because that's a pretty significant level, that 60K level, big round number, big obvious handle. Also, key area and market structure, which we'll get to in a second. But one of the more important things that I always will harp on after large moves, right? After we're, again, like I said, approaching the, after we're approaching an area where I'm just going to start, I wouldn't say it's systematically looking to buy the dip, but there's a lot of boxes that are checked, large amount of liquidations, 25% plus move off of the highs, multiple standard deviation movement to the downside in a really short amount of time. I wasn't awake for that candle. I also wasn't exposed to that candle, thank God. But after that, I want to see how the market behaves after a big dip, right? Is spot buying the dip? Is leverage buying the dip? Is leverage shorting the dip? There's a couple things that we'd look for, and you would expect different results from each of them. What you don't want to see is that leverage is buying the dip. So what we're seeing more recently is, we're starting to see a little bit more of a premium between futures and spot. Funding rate is neutral, slightly positive. It's almost negligible, but it is more positive right now than it is negative. So that's one thing to focus on. As I said, and I've been harping on this for a while, and this blue right here is just the indication of funding. As I've been saying for a while, what we want to see is price base out. Best case scenario for some real firepower is price bases out, and this continues to persist in negative values, right? We continue to see that there's negative funding. Because what that would indicate is there's actually people that are betting on continuation, but for their bets, which ultimately means for the risk they're putting on, price is not continuing down, and they're stuck, right? So if we have that negative funding, that discount to spot, and then we have open interest tick up, well, then maybe you have a case for, shorts getting offside and ultimately us having some squeeze fuel, right? Because they'll need to cover, and then you liquidated a bunch, you have shorts offside, you just have a lot of buyers that are built up, either involuntarily from shorts covering, it's not their decision, right? They have to cover, forced, or people that just pulled off the sidelines now because they've been stopped out. So we don't have that yet, and best case scenario is you just want to see funding negative and even open interest if it just stayed flat, right? A lot of times your perp open interest increase is going to be from longs. Most of the perp open interest or sellers rather just naturally are going to be your market makers. This market is kind of a natural long, right? It's more often than not, I don't know if I would call it like a homogeneous long, but it is it's, put it this way, sooner long than shorted, right? So the counterparty for majority of these longs is going to be the market makers, and they have to use the funding rate to keep the obviously the futures price and the index price in line, because you just have so much more long pressure than short pressure naturally. Does this all make sense? Hopefully. The platform on the right, this is a third-party plugin for Bookmap. You could get it on Bookmap. It's just not included. It is a DOM. But Bookmap already has, its own DOM. So I'll drag this in to the view. One sec. Oh, you can't actually see it right now because the DOM is set to top, which is good because the DOM can never go under something. Let me move this out of the way. So I'm currently not in position. You guys can probably, you could see. Cool. So I haven't really taken many trades today. You could see my volume actually. So I've done 2.5 million contracts worth of volume today, which is really, sometimes that's just one round trip, right? Depending on what kind of position size I'm throwing out. But I might have actually taken 4 trades today. So I don't think that should be from just 4 trades. And you could see that it's actually left off from where I opened and where I closed. So I had opened up a long, it wasn't resolving as fast as I liked, and I ended up closing it. I was stepping away to actually hang up the rest of my Christmas lights outside. But what you can do is actually on Bookmap, we could go ahead and just add a trading DOM. So add a default DOM, and then as you'll see when I drag this over, oh, okay, I see. I have my screen split up weird, so I thought I just dragged it all on, but it's split up separately. So here is one of the, this is a DOM. Now, I have this chart so zoomed in, so this is going to be really zoomed in also, but it's not normally going to be like that. You have it set up so it looks like my DOM. My tick setting is really high right now, so it's going to look funny. But you could create, basically my point is, you could create basically the same DOM that I have, that is through them either way, without having to purchase that, right? So that's what my point is. You could create that and take advantage of basically the same feature, which is being able to trade right off of it. So with this DOM, I could get in and out of position by just clicking, on the DOM. So you'll just see if I'll just put a couple contracts below, right? Now they pop up and I can just cancel them very quickly, go ahead and sell very quickly, get rid of them by right-clicking, place stops by holding shift and right-clicking, or market buys, market sells, right through the DOM. So very useful tool. Not the same depth of use as you would be getting if you were trading something like the ES or a tighter instrument than BTC. It's a little bit different. We're not basically observing kind of cross-sectional behavior between like the ES and the NQ and the ES and something else, where DOMs, if you're at a prop shop, you have a bunch of DOMs, And you might be doing just that, right? Observing behavior across assets and getting a little bit more actionable trading insights from the DOM rather than looking at some kind of other secondary order flow piece of information. So funding right now, like I said, not the best. That it's starting to tick positive. Not the worst. I mean, I think that ultimately what we're going to be doing is, so just, I have to make sure, like I tell you, like, here's where I fuck up, where I'm not honest with myself and I try to be the streamer that has like everything set up perfectly. Let me just take a second. So I have my one chart, because I know I'll get frustrated. I'll go to move something very quickly and fuck up, and then I'll sit here like kicking myself. I have my one chart with the weekly TPO, my daily setup for BTC. Make sure I have my ETH chart set up, daily TPO, and then I have this window for higher time for me. Okay, so I'm aware of what I'm doing right now. And then I have this window for, okay, cool. So a couple things really quickly. Macro front, ES moving up. So, this is a E-mini futures contracts. We're talking about, this is based off the S&P, right? This trades outside of cash session though. The only other time it's not trading is on holidays and over the weekend, similar to the CME, right? So through the CME, okay? Moving up, so that's great, right? Because if equities are moving up, we see that there is a correlation naturally, right? Risk assets moving up. Tech did well yesterday. I didn't even check tech today. But there will be that higher beta behavior between crypto and traditional markets. So moving up and the VIX moving down even more importantly. It's kind of been a weird regime the last couple of years, the VIX moving up, price moving up. Typically what you're going to see is VIX moves up when price is moving down. So there are some oddities that are apparent in overall market structure in equity markets right now, but listen, music's still playing, you should keep dancing. But as I said in the last couple of streams, and this is not something I came up with, Cloudy said this in one of his spaces. I asked if I could steal it, and I will steal it. If you're gonna dance while the music is still playing, at this period it might make sense to kind of dance closer to the exit door, right? Makes sense. But when the VIX is moving up, it never bodes well for crypto. So when equities are moving down with something that is just beyond expected levels, right? For example, the last couple of weeks, you had some pretty significant downside moves in the S&P. 1% in less than a half an hour. That's pretty significant. It's not the same as the crypto markets, right? That is beyond the normal standard deviation of expected outcomes, right? Within a normal trading day. So when the VIX is moving up, equity is moving down, crypto doesn't hold up. Maybe some do, right? But it's nothing to really bet on moving forward. Usually that kind of idiosyncratic behavior is an outlier, right? It's statistically likely that something will do well just by chance, right? It's just purely anecdotal at that point. So VIX moving down, good sign. Ultimately, if we're talking and we're bullish on BTC and ETH overall, and I think we're approaching a different regime, or we're approaching a bigger regime change, where we could see that now that crypto is more associated with the macro, specifically Bitcoin and ETH and some of the more dominant pairs, that there could be a major divergence because there's not a tremendous amount of gunpowder to go around for alts anymore. There is a wealth effect when Bitcoin moves up and ETH moves up and then spills back into alts, but I don't think we're in a position where everything can move up together right now. But I do think we're in a position where Bitcoin and ETH just follow as higher beta plays on traditional markets. And that might mean that shit sucks for the next couple months for alts, but ETH outperforms, and then BTC just kind of holds up. I mean, if you think about it, it's logical that any pattern of occurrence in the past in a short sample size will cease to exist in the future, especially when we're talking about one of the more important details to acknowledge, because that doesn't necessarily need to be the case. Because you could say that if they persisted for this long, it might be an adequate sample to say they'll persist in the future to some degree similarly. But when you have something that has had a drastic change, such as crypto becoming way more macro related, right? Trading around interest rates, trading around Fed decisions, trading around FOMC meetings, trading around, like it's completely different at this point, right? So, I mean, I would just expect that, honestly, Bitcoin is a play on equities, right? A better play, right? A 100 vol asset, 150 to 200% compound annual growth rate. And as long as equities do well, like, I don't see why Bitcoin wouldn't. It's so young. It just makes sense that portfolio managers, pension funds, your long only types are going to be like, yep, we're just putting a little bit towards BTC. We don't really give a shit about it, but we want exposure to that risk, right? We'll rebalance. You're rebalancing right around this time of the year. Things are going to get different now going into these end of fourth quarter, because you're going to have hedge fund managers that are going to lock in gains, right? You have hedge fund managers that are going to lock in performance just so that they are able to sell their brochure or their pitch deck next year more effectively, right? And then you have flows that might come in the beginning of the year just to get that new exposure, right, for the calendar year to follow. So you could expect some changes that are normally apparent in equity markets to be more apparent in crypto markets, specifically with these higher market cap pairs that are obviously more adopted than your shitcoins. Not to say shitcoins aren't being adopted by VCs and maybe some of them will blow up, but there's a dime a dozen, it's a fucking 100,000 VCs. So that's my thoughts, right? Bitcoin basing out does it on a low volatility period for equity markets. It doesn't do it when the VIX is elevated. It definitely doesn't do it when the VIX is at 30. So VIX dropping now, great, good sign. I ultimately think that BTC is going to take a little bit longer to base out. I mean, if we just look at the higher time frame before we go down to lower time frame stuff, we have that big bid at 46, but $32 million in this market at this point is a personal account, honestly. $32 million is like, I mean, I don't want to get into specifics, but it's there's a lot of CT accounts that have that money to swing around. And you could just be looking at, like, your favorite influencers, honestly, exposure on Coinbase looking to buy the dip. So it's not like a whale. How crazy is that, right? So BTC, I mean, large pullback into previous areas within market structure that you definitely would want them to see hold. I would expect that, you don't want to see us come back down below 41. That's obvious, right? To sort of maintain the integrity of this local structure, series of higher highs and higher lows. Bitcoin is definitely not as attractive as ETH in this regard. ETH is definitely holding up substantially. I mean, ETH hasn't even broken back down into any kind of more local market structure. So ETH holding up on the weekly. So this is honestly what ETH did last time. May crash. The higher time frame structure that was consolidating that led to a larger run up in that case. Again, honestly, guys, there's less fuel right now. It's obvious things are slightly different, and maybe we're going into a more boring period. But ETH holding the top side of this previous level market structure that, again, is a pretty significant contextual level. It's your weekly level, putting in a series of higher highs and higher lows still. Bitcoin is also, though, right? But it's just messier. From a trend following standpoint, still intact, right? It's just, like I said, it's not ripping and roaring, but that's okay. I would anticipate that we're going to build a longer duration range, and that's where we'll go into sort of a more zoomed in chart. The odds are that if we print down here, that we're going to trade into it again. I don't know if that means that, honestly, we get back down below 46, but I do expect that we're revisiting between 47.5 and 46 again. I mean, if I'm being completely honest, what I think the likelihood probability of that occurring is, I'd say above 70%. You have sellers positioning already for a return back to the highs in anticipation that we're probably going to range longer. Without a catalyst, without a ton of short fuel, I don't think we have it. And maybe the S&P rips up, makes new all-time highs. We see a big surge in the economy, and tech starts ripping up too, and then there's this drag-on effect, and then you have tailwinds. But I don't anticipate that occurring. I think it's more likely that, like I keep saying, and I think it's good to say these things because they easier to remember and to sort of conceptualize. Big ships turn slowly, right? We had a big move down. We're on par with the move down in May, I'd say it's obviously, let me go back to my lower time frame and then use a different chart. I'd say it's obviously a little less one-sided from this period. Not as much of a pullback, that's clear, but very substantial move to the downside. Chances are that you at least have a 2-week range of prints, right? I mean, even if we look at some of our more local pullbacks, it's not usually just one green candle and then upward. Chances are we fill out some of this area that we have not transacted in yet, or we have, but it was very short-lived. So big ships turn slowly. You're looking at, I think that if you're just informing this on the basis of statistics, historically speaking, you're looking at least 2 weeks, right? And I think that that very well could take place between sort of the 53 handle and all the way back down to the 46 level. And if you look at how this is building so far, it looks like we've done this many times before. We're just forming two ranges within a larger range. Mid-range becomes very clear. Your best opportunities. Mid-range gets kind of used up. Is less of a, I would say there's less certainty with regard to near-term direction when you revisit this level. Meaning if we come back down here now, maybe this is a good long opportunity. Maybe we revisit the highs before moving down to the lows, but who knows what kind of level of penetration we have around that midpoint, because it is so flushed with liquidity. It's not a good area to find risk reward, in my opinion. I'd rather get involved at extremes. So what that means is I'd rather get involved on another poke, ideally a violent poke up to the highs, or some kind of stab back down below these lows around 47. I mean, if we look at this on the 4-hour chart, if we look at this on a daily, it just kind of makes sense that, one, we revisit that 49 level. So again, that is mid-range. That ultimately, I think that is going to become more or less mid-range. And then at that point, we're looking back down again below 47, 46. This area down here, this region where there's this sort of shaded area, that's where our tail is. So if we're looking at a TPO chart on the weekly, also for that daily, that's our buying tail. Now, what you ultimately want to see is that if price returns to that level, so honestly, right around 46.5. So that 46 buyer, I mean, the chances are, if there's real demand, they're going to get front ran. So 46.5 into this level down here, I would start looking for a response there. If you get a ton of shorts into that pocket and price starts holding the level, very quickly, I might just be marketing into that position, expecting a snapback back to mid-range, or at least back to this 47.25 swing low right here. But again, my idea is to get involved around the extremes. The opportunity to fill out is already behind us. So filling out this gap. So this part of it was single prints, but all of it is basically a volume gap. So before we filled out right here, the trade was initially a return back to this shelf, was a fade. After a big move down like this, it's very unlikely, as I said, that you're going to V reverse. So we'll return back to that single print, a return back to where it really begins to taper off that shelf. Usually you're going to see that's a really good fade opportunity. We got a bunch of them. And ultimately, when we gained acceptance into this gap, we moved very quickly back up to the other side of it. So that's just, I had a friend of mine who he's, very versed in finance, portfolio manager for billions of dollars, has gotten more into trading technically, actually took an interest in TPOs, or to the TPO chart, was asking like, hey, what's the trigger? And honestly, a move like this, when we punched up above, you can't really see any pullback. It's almost like when price accepts, after so many rejections like this into that gap, the moment that you have this vertical candle in, it's going to be one of those times where if you're sitting well above and you see that price goes bid, so any selling comes in, you could even follow whether or not you have a limit chase showing up in the heat map. Any moment that the price goes bid, meaning a seller order comes in, for example, and you see prices holding that level, a lot of the times that might be the only opportunity in stalling that you have to get behind the move. But chances are when you accept into this pocket, accept into this void, that you are covering the gap, right? So covering the gap, just filling out that level. And I described this to him yesterday, and it's pretty good heuristic. here is a gap in a TPO, right? Gap right there. It's kind of a good idea to think about this flipped. So that's what it looks like. And you are the ball right here. Now, if you just roll it slightly up to that lip, it's not going to get over. That's right here, right? That's the initial area you're looking to fade. You're looking for signs of absorption, right? Signs of exhaustion. We talked about exhaustion around this level. I was in and out of a quick short on behalf of that. Looking for buyers to not be as aggressive, right? Pulling back a little bit or potentially getting off sides to no results, right? So work coming in, not leading to any kind of effort coming in, not leading to any movement. The moment, though, that you start accepting over that, what's the likelihood that the ball falls back in the opposite direction, right? It's not going to happen. Gravity takes over. This ball is coming down here, and it's going to roll up to the other side. Now it might settle back and forth, right? And then do what? Sort of fill out, find balance, find the low point, find the point of control. You can see how it sort of settles around the middle. And for this example, like that works out perfectly, but it obviously doesn't always. But the idea is you accept into a gap, you're going to the next sticky area, right? Which in this case was back up here, right? That's a local weekly higher high. It's the last area of market structure before we, took a dump. So typically that's how gaps will work. But we're just filling that out now. And we have another gap below us, though. I mean, if we go down to the low time frames, we see more or less we just created the same thing in today's profile. Now, in today's profile, it's definitely a single print. Right? If we look at a 30-minute candle, you can see that very clearly between this point and all the way back down there. So between, we're looking at 40, right around 50 handle, all the way down to 49.4 area, there's a gap. So basically, value has been developing between, roughly between 51.5 and down to around, we'll say 50 because it is the lows prior to this breakdown, and now we're sort of reclaiming that level and treating it as support. But there is a gap right below us, and if we're going to roll over, so if we do something like this, poke up and start coming back into this range, your acceptance back into this gap probably leads back down to 49.3 because this move was inefficient. And maybe it was driven because, people were getting long into the hearing, who knows. But there's not really necessarily as much buying behind it now. If anything, we're starting to see a slight lack of aggressiveness by spot buyers and a little bit more aggressiveness by those, obviously, the swap buyers, right? So when I say swaps, I just mean futures. So range developing now, another tight range. Now, if we break above, so just go back to the higher time frame chart. If we break above this local weekly higher high, and we're sitting on the top of this distribution, and price is not rejecting very quickly, right? If we're starting to accept here, I wouldn't fade this, right? Ultimately, a fade above, let's say something like yesterday's high into this level again, I would like to see a straight shot that is kind of immediately showing signs of buyers caught at the highs and price no longer able to hold the level. So you'd be really monitoring this on a low time frame basis. And I'd probably get very aggressive and tag on a position. If we started recovering that level, probably just pull out. Because if we start accepting above yesterday's high, we have ultimately what we have is the beginning of a trend, right? We have this is this current week's profile, but if we go back down to today's profile, bounce, price test lower, retest this prior level, it starts to make a bit more sense that maybe we're going to be moving higher, at least in the short term, than anything else, right? If we look at this in the high time frame again, and we're not looking at these TPO charts, this is resistance. We're at resistance again, but now we've retested this as support. If we're back above this level, we're just stair-stepping our way upward, and it doesn't make sense to sell this if we're finding support above, something like 52 or even 51.5. If we're finding support above today's value area, right? So even above or something like yesterday's value area is a better idea, because what we're doing now is we had a really balanced day yesterday. Chances are that if you break outside of balance and re-accept into a balance area, especially on a very balanced profile like we had, you're going to go from one side of balance to the other. So if we don't reject at around 51.5, or if we don't reject very quickly, if we straight shot up if we're finding support above this level, and just to give you an idea of what that looks like, it's kind of like this is clearly the resistance that we dealt with yesterday, minus this final fake out and breakdown, right? You had a little bit of a breakout, rolled over. That was the exhaustive push, right? This is where the CVD did this, all right? If we're finding support above 5150, this kind of looks like a scaled down version of the March 2020 crash, right? And then you're not thinking downside before you're thinking upside, right? At that point, if we find support above 5150, you know, we're looking at the underside of these lows back around ultimately 54 handle, right? I mean, that makes sense. Next major area of market structure is right around 53.7. So it wouldn't make sense to continually stand in the way of that. And when I say it kind of would look like the scaled down version of March 2020, I mean, we'll go all the way back there and you'll see we had a very significant bounce and we just kind of stair-stepped our way up. And each one looked like it looked like a potential rollover in process. So we had support found, resistance came all the way back down, right? Found support again, moved up, came back down. There's no major breakaway, right? Price is literally gapping up, consolidating, breaking down violently, gapping back up, doing this over and over again. It's not like it's not like we picked up speed really until we got around that 9K handle. Does this all make sense? So what I'm saying is maybe, you know, this could resolve like this. I mean, if we came into 53.7 area, came back down, and then just treated 52 as support, it'd be dangerous to fade this. Especially, so consider this in context of the environment where the S&P is moving up and VIX is back down around, you know, 15, right? So that's BTC. Hopefully that makes sense, right? Right now we have a little bit of a we have a little bit more perp aggression, but I mean it is kind of, it's negligible. It's nothing extreme. I mean, they're kind of in line, but on and off. But we're seeing the funding begin to go more positive. Hasn't been negative for the last 12 hours. I haven't seen a negative print. You can look at that right here. So, and there's really no adjusting right now that's taking place in those orders that are sitting above. So, I mean, this will be telling because as we approach the local range highs, so this is right around this 51 handle. You can see that is a point of control for yesterday's range. So where most of the activity had been isolated. Now, ETH is a lot stronger than BTC, obviously. But if we look at ETH locally, we're still within a range, right? The benefit is that with ETH, so we held the weekly level. Daily levels, we have, I mean, a marginally higher low right here. But we have a lower high. We're kind of funneling, right? So we're definitely compressing, definitely within a range. So we're looking at this. You have an inside weekly structure. The benefit is for this range, we're building a decent base in terms of where most of the soak and most of the volume was transacted. So with something like this, if we just considered mid-range, so we'll map this out on, we could put a profile on this. You have the profile right here, but you'd see the value area is higher. But if we were just going to map this from a market structure standpoint, so daily highest close, the low from this structure, and then it's never a line in the sand, so you can just see where all that confluence is between where you see demand step in and where you see sellers step in. Mid-range, so if you just use something like a fib, you'd see, no matter where you tie it, it's in the same, it's right where we are. So what my point is about that is the benefit of that is for a range like this, here's our volume distribution. You want to see that you have a B-shaped distribution. And ultimately what you want to see is prices trading above that, right? Because what you're saying is all of this activity, if you consider it was just even, then buyers are in better position, right? If we were going to, for example, let's go back to October 20, from the beginning of this, let's go to October 28th, and we'll just anchor a VWAP from there. And you'll see that we should be trading right around or above that. So we are. So, what we're looking at is basically, we're in the middle of the range, which more often than not, if you're creating a range that's kind of evenly distributed, you're going to see that the middle is going to be where bulk of the volume is isolated to, and it's just going to average out over time, right? As you move sideways, things are going to flatten out. Your moving averages are going to center. Your VWAP's probably going to center out. But the benefit is, as price is moving sideways, we're trading above this where most of the volume is, and we're doing it right around now. But it's, like I said, it's negligible. It's much more. It would be more meaningful to me if we're not just hanging out here now. But my point is, if here's mid, let's say we make an effort back towards the high, and then we start finding support around this 44.50 level. So if we reach up and find support above mid-range, right? So looking something like this, or just a retest that holds, and we see that there's a fair amount of selling that comes in and prices kind of remaining bid, then it becomes just higher likelihood that, one, obviously you're getting the move back up to the high, but ETH looks, honestly, ETH, it's tough to say that ETH doesn't look like it wants to just continue to rip up, right? And when you have something that's built like this, where most of the volume is soaked below, you have the potential for a fair amount of legs behind the move. So there's a couple things though. Like I said, ETH, BTC, they could be in a league of their own right now. And I think a lot of alts, if they're not outperforming now massively, their odds are that they're going to bleed out, right? So bleed out, and it seems like, oh, well, alts are, if alts are going to go down, and they're like kind of in a really bad position right now, where most of them are, you have unlocks coming up, emissions that just lead to supply increases, and there's no major demand right now. There's obviously more supply that's going to hit than buyers can sort of make up for. So, well, that's a brain dead short, right? Well, no, because alts don't just usually move straight down unless there is a bigger move taking place within the market where all correlations go to 1. Right? So what alts typically do is kind of like, it's what Doge does. So it's what a lot of, you've seen a lot of charts like this, right? Where they, over time, they move down ever so slightly though. Each time on the way down, and Doge is doing better, but there are a lot of alts that do this, right? They top, they have like a couple pieces of criteria that you would say add up to being an obvious short. So let's say this is a weekly double top, and then you have the first signs of failure. Okay, so you think, well, this is an obvious short. The trouble is dealing with price coming back to you constantly, because what it does is on the way down, it just does this, right? It's very rare that you get paid considerably to where you're comfortable. Meaning, and when I say get paid, I mean like you get into, let's say this is market structure. You get into a short up here, and price is already like a couple levels low. Like, for example, let's draw some structure on the way up. Something that you would say, oh, this thing is kind of screwed. So let's say, you nuked and already retested the level and are failing, and you're paid, right? My point is, like, you're happy in position. You've already lost. You're far away. When I say paid, I just mean you're far away from your entry very fast. Alts don't do that. They constantly come back to your entry or close to it. And if you're not, if you don't have a set area where you're getting involved, if you have a trailing stop, you're going to get stopped out constantly. If you don't have, the conviction, you're probably going to pull out of the position after it's halfway on its way back to you. And then you're getting chopped up because you're in this kind of fight with it as it continues ultimately down. And what it did over time was it did move down over time, but it was like this larger secular downtrend that was bouncing all the way down, right? Sort of instilling hope, having buyers chase it up, and then bleeding out. And they always, you know what the pumps look like. It's like downtrend, big pump, and then bleed. And then downtrend, and then big pump, and then bleed. It's like a sawtooth pattern. So I mean, I think there's a bunch of alts that do look, that do have compelling cases to be, there are rather compelling cases to be made for them remaining strong. For example, if we're leaning on most of the market agreeing that market structure is very important on the high time frames, just from that standpoint, Solana is doing its job, right? From a weekly standpoint, we're obviously getting muddy on the daily time frame, but on a weekly chart, this area was a major area of resistance, very significant flip right there. It's not good that it's favoring that level now, but needless to say, it's not broken until it's broken, and I wouldn't want to be the asshole to short this before breakdown. And then honestly, with Solana, I would only want to scalp it short, right? I would just not be confident putting on a position and being like, I could comfortably walk away until we get like down here. Right? I don't foresee that that is the case unless there's a major sort of market shock where they're, systematic move rather than something that's sort of idiosyncratic to Solana. So Solana doesn't look bad. It doesn't look strong compared to ETH or BTC anymore, right? At least in the short term, which I think is important because if these are going to show signs of strength again and hold up, I'm going to be wanting to measure them at least against ETH if ETH is showing signs of strength. Otherwise, why would I be in it and not be in ETH, right? So Luna showing signs of strength. Big move up by Luna. I was short Luna, actually. And this is my point. I was actually short Luna from a very nice position. And I honestly thought that I would be able to let go of this. And I honestly don't remember exactly where I got short. I'm not going to like LARP here. I closed it out in profit, but I probably would have let this go against me. Or if I had not monitored it, right, I'm coming back to it. It's just clear that I had this idea. Right, you could be so confident about something, right? Oh, we lost market structure. Like market is topping right now. We're going into a shitty period for everything. Blah 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 blah. And then the next couple days afterward, it's like someone stuck a power grid into it, and it just shoots up and shows signs of life. It's like someone connected a power grid to a defibrillator. So it's very misleading, but this is showing signs of strength, so why bet against it? I guess that's one of the more important points. Like, what has been showing strength? You should bet on continuation rather than the change. And this is where I think a lot of people have trouble. If you're looking for good shorts, you honestly have to look at the things that look already pretty bad, but are not very close to support, and expect they're going to continue down to the next major level, rather than look at them and say, well, they look like they've already put in a big move to the downside, versus the things that look like they're still overextended and they're strong, honestly, and you think like this is still higher up, so there's more downside to capture because this is going to continue down. It's like it kind of seems like it should be that way, but you're betting on a major change taking place when you should just be betting on what has occurred to persist. Right, you're sort of imposing your will you're trying to impose your will on the market rather than trading what is. You're trading what you want to be. So ETH is just strength right now. I mean, the next obvious against BTC, the next major area of support is right around 7-8, but Matic out of nowhere. Helps when Hisaka tweets something. But what has been sort of the story for this? So what has been the story months ago is probably definitely going to be the story now. That's kind of contradictory, right? Probably, definitely. It is more than likely going to be the story now, even to a larger extent. So the story months ago was breakouts are not rewarded like they used to be. And what that means is consolidations that are clean, the break of them does not lead to a move that pays you substantially in the short term. You have to deal with the choppy behavior around that breakout before a larger move. So with Matic, and this kind of goes back to what Bitcoin went through too. Bitcoin, one of the higher EV trades across multiple asset classes when you spend a long time away from it is a retest and break of an all-time high. This is local though, right? I mean, in a momentum-driven market with the amount of reflexivity we have, it sounded funny, reflexivity, Bitcoin all-time high breaks, they usually get a lot of flows behind them. So this is a pretty good sign of where the market is right now, the fact that we folded back into a local area structure when we spent a good amount of time away from it. A good amount of time in traditional markets is when you spend a year away from an all-time high and a company recovers it, right? At that point, like if you're looking for a swing failure on the high time frame, you are an idiot. Commodities, same thing. Even though gold kind of died on the vine at the all-time high, not on the vine because it's old at this point, but gold was kind of one of those situations. Long-term move away from the all-time high, returns back to it, looks like continuation, but guess what? Showed up at the wrong time. There's a new pony in town. There's a new horse on the track at this point, and it's digital. So with alts though, what has been the case is like if you look at AVAX, if you look at Solana, if you look at Luna, so for example, like you could go back to any one of these weeks where there was an all-time high and we spent some time away from it, and it might have looked like this one. It might have looked like this one. It might look like this one, right? The point is, none of these where we spent some time away, a couple weeks, none of these led to like really big moves, which is what thinner pairs do, which is what pairs do in the beginning of the cycle. None of them have. They're kind of doing what equities do. They're breaking out and they're just grinding. If you look at like a higher time frame chart with equities, they just do this the entire way up. There's some more obvious ones in terms of market structure. Tesla really long, it's sideways behavior for years, breaks out, really strong move out of the range, retest leads to a really strong sustained move. But this is a weekly chart, right? The point is I guess the point that I'm getting at right now is that if we're looking at something like this, which previously would be sort of the perfect criteria to expect a big move in the near term, it's just not that they have as much follow through. So Hasaka tweeted there's some positive developments with regard to something I think tomorrow or the 11th, but I just wouldn't expect that we're just going to one-way trip this, bus is leaving kind of situation. I think what you have to do now is treat more of these like you would equities. All-time highs and grinding upward is a sign or evidence of strength overall, right? It is surviving, right? It's continuing to make progress upward. Market structure, price action is just different now in this regime. And you could say that a lot of the behavior in BTC and ETH is due to the fact that we do have different types of participants in the market now. We have different players, right? You have, Jump. You have market makers from traditional markets that are involved in crypto now. You have higher frequency. It's not the same high frequency, but it's, higher frequency coming in and sort of smoothing out the behavior in the market. So let's see. We have charts like DeFi Perp and Alt Perp that are a pretty good barometer for the overall state of anything outside of the major pairs. They're stuck in a range, right? Problem is, these pairs are stuck in a range and people trade them when they're zoomed in like they're beginning to trend, right? Price is probably going to continue to do what it has been doing, right? Which is range. And one of the reasons why that just happens is because it becomes self-fulfilling. When you get trapped in a hole, and you are talking about trapped on a weekly time frame, if the market doesn't have any kind of major tailwind, you're a dummy if you buy here and don't take profit at this level. So now multiply that by the millions, and that's the sell pressure that you face when you approach key technical levels. Right? That's why breaks of technical levels are so significant. Because one, you send a signal to the rest of the market that, hey, things have changed. All-time high breaks, you say, hey, this is surviving. Any narrative you had about it not is clearly wrong, at least in the short term. And you also create a ton of structural flows around the level, right? For anyone who's short, they're going to be covering. For anyone who's no longer long, it looks like it's a fresh long. But until that's broken, you have a lot that stands in the way of that. So, this is just, so Crabata is a good, that's how you pronounce it, right? Crabata. This is a good example of like, I missed too, but I'm happy. So I am someone who takes profits too early. I get really confident about alts, and then I totally become a bitch. I wuss out. Like I hold for like 200%, and it sounds kind of ridiculous because 2x is awesome, right? But I'll hold for like a 3x, and then I'm the one who holds Solana from 3 to 5. I was the one shorting Solana, but I was the one charting Solana, talking about how it was great, and then not getting involved until very a lot higher. Missing, capturing a 3x, foregoing a 20x. Now I'm happy I do that for the times like this where I'm confident in something and then I sell after a 2x. I think it was maybe a 2.5 I got out of this. And then the market takes a dump. And I honestly thought I was like, I'm gonna sell here because I'm kind of sensing the market's due for a larger pullback. I don't think this is kind of gonna be able to weather the storm. But I thought I'd be buying a dip sooner. And sure enough, most alts that get listed on FTX, if they look like this only, they're coming back down to the lows. So a good example of that is DYDX. If your chart, and all of the SAM pairs, they've done this. If your chart is listed and it's on FTX and looks like this still, unless it is born at the perfect moment, the beginning of the bull market, right? It is going to come back down, likely to the lows, right? That are printed on that exchange. You have a lot of people that are involved in the beginning, way earlier than anyone who gets to see this on the exchange. And they can sell up here happily, but they could also sell down here happily too. Because they're up, price can pull back on the chart 50%, and they're up still 100 times. Right, so that's why it's hard. You have to understand that to understand why the sell pressure can still be coming in, because at that point they're agnostic, right? They're already up. The difference to them is being up 1,000x, being up 500x. So it's just rare that if charts start rolling over and they're new and they look like this. Solana did it in the beginning. SRM did it in the beginning. Ray did it in the beginning. DYX did it now. Spell did it. And now, Crabata, all of these new pairs, just chances are they're going to have big dumps. I definitely want to get involved. And this is a smaller market cap one, guys, and I'm not in it now. And I don't know if I want to get in it. So don't go running into this. I don't think it's a good buying opportunity right here. But I think that it could be, and I'm just referencing this because, and I'm telling you, I have no position in either anymore. A similar situation to this. And this is why I wouldn't want to get involved yet. Where you get a bigger puke through and it's like, oh fuck, that looked like the good dip. What's going on? It's going much lower. And then, when price begins to base out, you start looking for longs under this area of market structure. So Bitcoin's still relatively accepted in the center of this range. I mean, you have a little bit of a funnel taking place. It doesn't look that strong right now, to be honest. Good move off of the lows. So I ended up closing out my longs, and this is a funny story. So I closed out early, trading around a core spot position that I ended up tagging on. Closed out some around here, ended up shorting this future, so trading around the position. And then I thought I closed out the entirety of my position on the push up. And I made this mistake now with, what did I make it with? So I made it this morning with ETH, and I made it the opposite way with Bitcoin. This was yesterday, where I don't frequently trade spot because I'm either getting involved in key at key levels, and that's it. I have like a lower time preference with those moves, and I have a higher degree of acceptance for how much the price moves against me. I'm willing to deal with noise with spot because it's not leveraged. But I thought I got out of my spot BTC, and when I hit sell at limit at the wrong price, so I was still exposed. So that was a nice surprise that I wasn't completely out of spot. So I was watching, on the exchanges, you hover at your account value, and I was like, maybe my account value, because it was higher than I last remembered. And I was like, maybe my account, sometimes it glitches. Like if you don't refresh the window, it's as if it's reflecting you not having changed a position. I'm like, I've seen that before. But I hadn't sold my complete stack. And I don't want to completely get involved down here yet until price bases out, but I was like, that's a nice surprise. But then this morning, I had the opposite side of that, where earlier I got long ETH perps, and I thought I got long ETH spot. So ended up topping out, and I'm looking at the perps come back towards my entry, and I'm like, this sucks. And I'm thinking, like, why is my account not going down as much? Because I got in the spot earlier. I didn't get in the spot. I tried to buy spot, but I ended up trying to limit buy it, and I never got filled. I didn't have the template set up. So not paying attention to what you're doing, which can be troublesome if you're trading with something that involves margin. Kind of not a fat finger, but a mistake nevertheless. Not paying attention. Detailed look at ETH/USD and tell us my very next trade. Well, that's interesting because I don't know if I have a next trade with ETH, but let's look at one. So multi-book, ETH, and this is how easy this is. I'm going to set it to higher tick size for the multi-book because it just makes it a little bit easier on everything computer-wise. I have a team building me a new computer. I posted about that not too long ago on Twitter, and I have a awesome computer being built because I do run a lot of stuff. So you have to give me a second. This is loading now because I didn't have the multi-book loaded, but you see how easy it is, right? I just loaded a multi-book for Binance FTX, Coinbase Pro, Kraken. Let's add some more time to this, so it might take a second. Now it already looks like there's a fair amount that's stacked above us. But that doesn't mean the price, so nothing on its own when you're looking at the heat map means anything. It just means someone has advertised there. So let's see, is this loading yet? So this is just my computer right now because I've, it takes up a lot, I think? Agar. I'm not sure, I could be wrong, but it seems to chew into my CPU. And Brave, I switched from Chrome to Brave, and that helped a little bit, but... So is this, it's still importing, there we go. Good stuff. So like I said, ETH is still at mid-range, right? So I consider this higher time frame wise to be mid-range. Still stuck within, so we'll go to, this should have the, why is it not showing me the TPO? Did I change it and I left it on this? Let's put ETH on here. It should be set to the right tick setting. Okay, here we go. So we're still stuck within a 2-day range, right? The next area, we have a naked point of control and a pretty sticky point around 45.20. And as you can see, we have orders that are stacked up. Nothing really substantial. But laddered up all the way up to 5,000. There was a lot more support with ETH, and as you can see, that's since been pulled. So I think that ETH, while it was outperforming BTC for the last couple of days, it's still going to basically take the same overall direction that Bitcoin takes. So if we're looking at Bitcoin maybe having one more push up before seeing a larger pullback, I wouldn't expect ETH to do anything less. So whether or not that 40 handle holds as support, we'll see. I mean, it was pulled so far. But again, that doesn't mean that they can't show up, and that doesn't mean that that's sort of the end-all be-all, but just from what we could see on the chart right now. So we had a large amount in the bid that was pulled not too long ago, honestly. but we're around mid-range right now. And honestly, yeah, as long as so I trade low time frames, but one of the most important things to be aware of are the higher time frame levels, right? Because these are the areas, one, so revisits back to major weekly, daily support, area where there's a ton of activity in the past, a major, defining feature of market structure, so the most obvious levels in the chart. If I'm trading low time frames, I have to be really sort of cognizant of where these levels are, especially if we're close to them. Because at this point, I might have a long setup on the low time frames, but I'm not zoomed out enough to recognize that this is, on the high time frames, a key area of market structure that maybe it would make sense to not prioritize the short-term long at that point. Or I might have a short-term position line up with a very key, a key area of market structure that would be a good area to get involved on the high time frame as well for more of a longer-term swing position. So we're around mid-range right now. So that on its own, just in terms of this support, so you sort of extend even more locally what has been relevant. This chunky area within a 2-day range, coming into resistance, I can't see a reason to really do anything until we either break outside of yesterday's range, or kind of take a hint from Bitcoin. If Bitcoin's going to continue to push up, I wouldn't expect ETH to do anything less. I just can't see buying this level right now for ETH. In my opinion, it just makes sense that if Bitcoin is going to range longer, so is ETH, and both of them right now don't look like they're showing the same amount of strength they had, 24 hours prior. Again, there's not much in the way until you get to 5,000. So, but we have a decent amount at 45. I mean, it's nothing, like I said, this market has made a lot of people wealthy. So we're looking at 11 million in the offer right there. That's just what's advertised though. I mean, a lot of compression here when you're looking at it on the 30-minute chart. If you just eliminating for the fact that, that's on ETH, same sort of story with BTC, this compression, right? We're kind of funneling. I mean, usually a move that is compressing like this is going to at least lead to a 1-for-1 move. You're looking at either move back up to the high, or if we break down, at least a move back down to the lows. As I said earlier, if we end up rolling over, yeah, you might just sweep that single and then move up, but if you start accepting back within that gap, you're coming back down. And this chart has all the levels of market structure from the high time frame labeled as well. And they've been important, as you can see, this weekly pivot, high confluence range high. This goes back well into the past. So it's been relevant moving forward though too. But like I said, if the S&P continues to rip up, I don't see a reason why Bitcoin and ETH wouldn't base out and move up as well. That's why I was saying a couple days ago, I got to take my own temperature with this because I don't want to get swept up in being bearish because we had a big move, because we had a huge move and it already happened, right? It's like the pain is, it's already the shot's been taken, right? Blood has been spilled. It's a large amount of liquidations. I mean, a big move. So on balance probabilities, what are the chances that it continues versus does what it usually does after very large moves, which is find some sort of balance and consolidate longer than anything else. Solana though, if we look at Solana on the high time frame, like I said, I did this earlier. Solana weekly still intact, a little bit ugly. Obviously 5 weeks in a row that are red, but still holding that level. I mean, if you look at it on the daily structure, you might get the impression that it's kind of basing out right here. Soft landing. But I still would want to see that, for example, we could retake one of these local swing lows within the daily. Because right now you have a low, lower high, lower low, slightly higher high, so it's somewhat expanding. But now in the process of making a lower low, at least what you would want to see is, and that's kind of, at that point, that's not a lot of evidence, honestly, because you could float above 192 and still rotate lower. So I mean, more, I guess requiring more would say breaking out of this consolidation that we have for the last few days. So breaking above something like 205, because then at that point, if we look at this more zoomed in, there wasn't much in the way on the way down. So if we look at where the bulk of the activity has occurred, it's clear here's the range, here's the trending period. This is not, it's not one-sided, it's not a gap, but there's not much structure that was created on the way down, and that works the same as it does on the way up, right? When we put in a structure with BTC or anything that does something vertically, one of the most important questions is, have we built a base? This is ugly because there are stops that have not been tapped. And when you do tap into those levels, it's likely that you flush them all. Well, the same can be said in the opposite direction. If you have a structure that is kind of melting down like that, there's nothing major. The only thing you could say is like sturdy was this area right here, right? 210 area, that's where we came back to and flipped. So that general zone, yeah. But if you accept above that, here probably moves pretty quickly, right? You probably move back to 230, kind of the next high volume node within that structure. It's a good area to take profit into. The high volume nodes, points of control, good area typically to take profit into rather than necessarily take positions off of. I don't know, good question. All of these meetings that years ago wouldn't have been important are obviously a lot more important now. So I don't have thoughts on CPI or any kind of Powell pressers in advance usually. The market is going to tell you exactly what it thinks, usually pretty quickly. And then at that point, it doesn't make sense to be in opposition to what the market is doing. So it's usually just a matter of, one, you got to know these things so that you're not sort of inadvertently positioned for one outcome over the other, and you don't know that there's a meeting, right? That could at least cause, in the short term, some type of activity that is considered more volatile. I don't usually like to be in position. I don't like to be in positions unless we're talking spot for these meetings. I like to trade around them, and I don't usually like to go. And when I say usually, I don't know why I did, because I don't like to go into them with biases. There's, if you've seen enough if you've seen enough from FOMC meetings and anything that the Powell or any one of his predecessors have done, markets are going to come to conclusions sometimes that you would have never known, or that you would have never expected, rather. So I don't have thoughts going into it. I'm going to let the market tell me what it thinks of it, and try to be in line with those flows. There's good opportunities when the market is pre-positioned for an outcome that does not, that ultimately it does not receive. But I don't think anything. I don't think we're in a position with this meeting coming up for that. There's already plenty of talk about accelerated taper. I think as of maybe this morning, there was talk for 3 rate hikes versus 2 for 2022. It gets above my pay grade at that point when it comes to talking about that stuff. I don't want to act like some super savvy macro trader. But with any of those meetings, I would always have a chart with the NQ or the ES open, and be focusing on Bitcoin's activity on the low time frame with respect to what they do as well. And I would just expect that one is going, the Bitcoin is going to follow the index. And the times when that doesn't happen is like if there is a ton of, it's actually the same. If there's a bunch of QE announced, if there's any kind of talk about rates being raised sooner, That's going to have a bad effect. But obviously CPI is not directly going to be that. I mean, inflation obviously is connected to rates going up, but or the more likely that if inflation continues to persist, it's more likely that the conversation about rates would continue to persist. I don't know if they would actually raise rate. I mean, honestly, like I said, not my pay grade. I definitely don't like to speak outside of my area of competence. I think it's like one of the mistakes that most people make is that they always have to have an opinion on everything, even about shit that is completely outside of their wheelhouse. Like I studied biochem in college for a little while. I've on and off of finance and econ, and then biochem, and that change of heart. I was in college around the time of Hurricane Katrina, and I was like, I want to be a doctor, and like a quick change of heart. But like even I used to be able to really. I used to be really familiar with everything in that area, surprisingly so for someone who was more of a finance econ brain. But now it's like I've stepped away from it so long. Like if I open my mouth about it, I'm not going to have the same amount of knowledge I used to, and it's frustrating because it just makes me feel stupid. But there's people that literally will talk about any subject because they have an opinion on it, and it doesn't mean that they should. But I don't. If I'm going to say something, it's usually on the basis that it's supported historically, at least. If we look at, well, why not? Let's just look at rates. Okay, historically speaking, this is the Fed funds rate, right? The trend is your friend. What do you say, right? The trend is down, right? I mean, if you look back at 2006 up to 2008, the financial crisis, and then if you look at 2016 to 2019, those are periods where rates were going up and the market was going up as well. So it's only become something recently where, and it's because of obviously debt as well, or servicing our debt, but debt ceiling, obviously they're increasing that, but it's been the case that markets have been able to go up with rates being elevated, right? This has been like something that it hasn't been, the abnormal feature of markets is the last 20 years where they've been so low, right? But you can see, nevertheless, the trend is down. And I don't think that it's going to be higher than they did in the past. I don't think we're ever going to see a rate increase beyond what we've seen in the past. So if they raise them by like 25 basis points, maybe it's short-term knee-jerk response by the market, and then what do? They pull it off. So I think we're in a position where that can't really change. And I think they're hoping to figure out a way out of that mess. Sort of like something's wrong with the plane and you're forced to figure out how to fix it while you're flying. But yeah. Yeah, that's great, Push Cards. Great point. Yeah, you know what? It's like people have for example, like if this is another example that I forgot where it was referenced first. Maybe it was Thinking Fast and Slow or something, some kind of behavioral book. But it was like a doctor. If you ask a doctor a question about medicine, they'll tell you that there's really, not usually one simple solution ever. Things are, not, there's no clear answer usually. It's, they won't have, how do I put this? Because it sounds kind of stupid. They'll give you the rundown, right, on pros and cons, and they don't have a clear answer to everything, right? Only on the more recent data, only on the more recent studies. Medicine's constantly changing. But if you ask a doctor about the market, they'll be like, they should raise rates. Like they have an opinion, right away. It's like a firm opinion. This is especially so when it comes to people in politics. But it's too much of that with everything, especially on Twitter, where like a plumber has an opinion about, what an electrician should have an opinion on, like dumb stuff like that, right? kind of poor example, but I think the extremeness of it should highlight what I'm talking about. So, all right, guys, I think that's going to cover it, though. The stream's been pretty long, going on 2 hours. Be sure to check out Bookmap, though. I mean, I don't team up with a platform or an exchange unless I think they're the real deal. And when I first teamed up with Phemex, got some shit for it because they're a new exchange 2 years ago, starting out. Like you're not gonna fucking start with volume. If you start with a ton of volume, that's a bad sign, right? Means someone's wash trading. And someone said that in the beginning, and then they're proven by a third party that no, their volume's legit. But we don't partner with anybody unless they're legit. I don't put my name behind something unless I think it's legit. And I use it myself. And I was saying in the beginning, like, only way I was going to use Bookmap was if it was going to improve upon and replace something that I currently use anyway, because I don't need anything else right now. Like, I've had the same trading approach for basically ever. Obviously not when I first started, but we're talking about I've been participating in markets now for 15 years. So I don't need anything new. Obviously, I'm always trying to sharpen things, but new traders are always looking for something different and new, and then they try it for the first time, and 2 weeks in, they're like, this is the best thing ever. I figured it all out, and it's like, no, you didn't, dude. It's just, if you're saying that, you clearly didn't. But Bookmap has all the things that I'm synthesizing from other sources either way, and it's a better source for those sources, honestly. You can execute on it through exchanges, trade right off of the DOM, trade right off of the chart, so I could click on the chart and trade. I am seeing basically the tape on the chart. So with those large order sizes, you could pick up on icebergs. There's a bunch of other features you could use. And I'm also seeing how, again, the book is adjusting. And more importantly, I get to see all the spot exchanges in one, which is very useful. So, yeah, great point, John. Great point. That'll be it, guys. Thank you for tuning in. I hope you have a fantastic evening. Until next time, have fun.